umbrella is a very important tool. And everything that's under this umbrella, can you see it all under the umbrella? Everything under that umbrella is all a part of my owner's equity. It all goes together. All of this guy goes together. At the end of the month, we will actually take all of this stuff and pull it up into that one. But we're just not quite there yet. Okay? So the easiest way to remember that is to flow off of the stem of your umbrella by saying the things that are to the right of the umbrella are going to increase on the right. The things that are on the left side of the umbrella are going to increase on the left. So when you get to your umbrella, make that. Underneath that umbrella, work off of this to remember as your memory hook. On this umbrella, if it's to the left of the umbrella, it's going to increase on the left. If it's to the right of the umbrella, it's going to increase on the right. It's these big guys across the top that can work off of this equal sign. Saying assets will increase on the left, liabilities are increasing on the right, and my capital is increasing on the right. You see? Are you thumbs up with it? Good. This is the hardest part right there. It truly is the hardest part. If you can just brand it in your head that expenses and drawing, think about it, expenses and drawing take away from your owner. It's gone out the door, you've spent it on something else. It's going to decrease that capital. Better? Okay, let's do the next one. Paid your phone bill for $50. Ooh, I wish that was my phone company. I only owed $50. That went out right. Pay a bill, what happens to?
Cash goes down.
Cash. So you can always ask yourself the question, what accounts does this transaction affect? It's going to affect cash, and it's going to affect an expense, right? So cash is going down $50. It's going to go down on which side? $50. Never do I write it down once, because this side always has to equal this side, right? But I didn't buy another asset, so it's not going to be that I've replaced this $50 with something else that I'm going to use in my business. In fact, it's the phone bill. It's already gone. I've already used it. So it's an expense. So I'm going to mark in my telephone expense here. Because it is on the left of my umbrella, it's going to increase on the left. And left means? Left means debit. Right means credit. Okay? Good?
Good.
So if I analyze that one, I have gone down on the left side of the equal sign, and I have actually, even though this is a plus, have gone down on the right-hand side of my equal. Because this guy is attached to this left side. There's like a bungee cord to that left side. Okay? I also have a right and a left. And then notice this. I also have a credit and a debit. Okay, let's take a look at the next one. Delivery revenues earned on account. $600 worth of deliveries were made, but this time nobody paid you. You have to recognize your revenue of $600 at the time that you make the delivery. So, delivery fees go up or did it go down? They went up. Right? Everybody agree?
Yes.
Where's it going up?
On the right side.
It's not only is it on the right side of this umbrella, of the equal sign, it's also on the right side of the umbrella. So this is where it's going up. And right means what?
Credit.
Credit. Now, The interesting thing about revenue is that the opposite side of revenue is going to be one of two things. They're either going to pay you in cash or you're going to receive the cash later. One of the two. That will always, the other half of this is always going to be either cash or accounts receivable, one of the two. You're either going to get the money up front or you're going to get the money in a little bit, hopefully.
Hopefully I don't skip.
Yes, hopefully, that's right. So I've got $600 going on here. On this particular instance, they didn't pay me in cash. So I can't say plus cash, can I?
You have to do
But
an accounts
instead,
payable.
I'm going to have a new, no place to write.
You gotta have an accounts payable.
Yes, not, no.
I mean,
Not an
accounts
accounts
receivable.
payable, I'm gonna
Receivable.
have, yes. It's not a payable because I don't wanna do the delivery
And then you
and pay for it
You want them to
too.
pay you.
I want them to pay me, I want to receive the money. So this is gonna be an accounts receivable. Okay, so from this equal sign, it's on the left, so it's gonna increase on the left. And left means, left means
Debit.
Debit.
debit. Right means credit. So this $600 then is going to be put where?
Left side.
Because now I am expecting to receive $600. So if I look at this transaction, I've plussed on this side, I've plussed on that side, am I in balance?
Yes.
Yes, I am. So the next particular one that we're going to do is purchase some supplies. So we go to store and we buy a bunch of supplies. In fact, this is our basket of supplies. And even if this is all full of consumable supplies, we are going to be able to use it in the future of our business. So when you get it, you consider it as an asset because it's now something that you own. So Rebecca, I want you to help me on this one. If I buy $80 worth of supplies, what two accounts are affected?
Your assets on supplies.
Perfect. My assets on supplies, meaning that my supplies went up by $80. And what else? I bought those supplies with what? So I traded cash for supplies, so my cash went down. So I plussed and I minused on the same side of the equal sign, which means that they canceled each other out. I also have a plus and a minus. I also have a debit and a credit.
So if you do it
So I'm
on
in
the same
balance.
side, you don't have to do it on the other side.
The only time that you would do it over here is if you bought the supplies and
You charged.
you
put
charged
on
it, you
account.
owed the money later. You were going to pay them later. And in that instance, it would go up here and it would go up over here. Good question.
And would it go on both sides if you did like part cash and part
Oh,
credit?
that's a good question. So what if you bought $80 worth of supplies, you paid for $50 of that, which means that you owed for $30, which would go here. And in that instance, I have an $80 debit minus a $50 credit. So what is the balance on this side? Is it 30?
$30.
80 minus 50 is 30. So 30 equals 30. Good question. Okay. Payment of an insurance premium. I think that in this particular instance, you bought an insurance premium for $200. Now, insurance is a little bit strange because we think about insurance as being something that should, normally we think of it as being an expense. But remember, when we purchase insurance, we are purchasing it for the future. It's not, you don't buy your car insurance for last month, did you?
No.
They want it up on the front side. So you prepay your insurance. So on this particular instance, let's say they paid out the first 6 months of this policy, then that means that it goes in for this whole time. Right now you haven't used any of it. It's going to be considered as an asset. Okay? So they paid for $200 for insurance, prepaid insurance.
Okay.
My insurance went up
Yes.
and my cash
Went
went
down.
down. Both of which are on the same side. So cash is going down with a credit.
Yes.
Everybody agree with that?
Yes.
And supplies, sorry. Prepaid insurance
It's
is
gonna go up as
going
a debit.
up with the debit. So I plused and minus on the same side of the equal sign, so it canceled each other out. And also, what happened? I have a debit and I have a credit for $200. So my debits, after every transaction, debits have to equal credits. And that's a very important concept. Any questions so far? Is it gelling a little bit? Is it making a little bit better sense?
So you'll always have a debit and a credit that cancel each other out. Kind of, sort of, in a way.
You will always have a debit, if they're canceling each other out, they're on the same side. But you will always have a debit that equals a credit. Because let's say, for example, this beginning one for 2,000, that's a plus. This is a plus. Both of them are pluses. But you plussed on this side, you plussed on that side. You have a debit and you have a credit. So your debits always equal your credits. Okay. Cash receipts from prior sales on account. So in our delivery business, we received $570 in cash that we had delivered previously. Let's think about this one for just a little bit. Is it going to affect my revenue at all if I made the delivery in the past?
No.
No. This is one of those deliveries that I've already, you have to recognize your revenue when you do it. When you perform the act, it goes under revenue at that point, okay? That's the form of accounting that we're studying in this class. So this $600 went in here, but if you'll recall, they didn't pay for that $600, did they? Instead, it went in over here under accounts receivable because we're going to be receiving it later. Well, guess what? We received some of it. We received all of it. We only received $570 worth. Okay? So how do I put that?
The cash will go up on the
Cash?
debit side by 570.
I normally write cash there. I'm sorry.
Cash
Cash is
will go
going
up by
up.
570 on the debit side.
That's right. Cash is
And
going up.
the $30 will go on the credit side.
Hold up. Don't think about the $30. That's your balance. That's a good thing, though. You collected $570 in cash money. So what's going to happen to accounts receivable? It's going to go down by how many dollars? $570. And now, there's that balance part. Now you're only expecting to receive $30, which is the balance of that. And you know, that's going to be your goal in your business. You may let people charge, but your goal is going to be to turn those accounts receivables into cash just as quickly as you possibly can. You don't want people to owe you a lot of money. So, that's the good thing. That it moves right on over there into cash. In the business that we used the other day about the motor scooter, I think Ashley hired somebody else to go to work for you. I don't remember who you hired.
Stacy, I think.
You hired Stacy, and Stacy's not here tonight. So Stacy, we bought her a scooter for $1,500. So when we bought her the scooter for $1,500, we decided that we couldn't pay for all of it. You could only pay $300 on the scooter. Well, where this was going to be one that's going to make you think, but just a little bit. So I bought a scooter for how many dollars? $1,500. So what happens in the scooter world first?
It goes up by 1,500.
Does everybody agree? Delivery equipment is going to go up 1,500? And it's going to go up on the left because here's my equal sign and anything to the left goes up on the left, right? And left means what?
Debit.
Debit. 1,500 going up. I only paid 300.
So your cash is.
So cash is going down
On the credit side.
by how much?
300.
300? Everybody agree with that? So I have 1,500 going up, 300 going down on this side. What else am I missing?
1,200 in the credit.
On accounts payable, which side is it going on? Do I owe more money or do I owe less money?
You owe more, so it's gonna go on
I owe
credit.
more money. So I'm going to then have $1,200 that I now owe somebody else that I'm going to have to pay. I'm not receiving this money, I'm paying somebody else, okay? So if you think about this one now, you really need to look at it, because what happened here? A 1,500 plus and a 300 minus equals what over here? 1,500 minus 300 is what? 1,200? So I plus 1,200 on this side, and what did I do on this side? I plus 1,200. So I balanced, right? I also have a debit, and I have a credit, and I have a credit. Do my debits equal my credits? I have $1,500 debit, and I have 2 credits that equal
1,500.
1,500. So my debits equal my credits.